Hi, my name is Orly Stern-Yitzhaki, and I'm the head of Digital and Innovation or Development at Menora Miftachim. For the last years, I've been working in the finance industry, especially in the area of customer experience and digital, and also combining innovation and startups into large, big, traditional corporates, and including building Pepper, which is the first digital bank of Israel. Today, we will discuss the top trends in InsurTech in 2018. But let's begin with a quick introduction. So, Yaki, do you want to start?
Hello, everyone. My name is Yaki Baranes, and I'm a partner at Baker Tilly Israel and the head of Strategy and Management Consulting Division.
My name is Yair Smith. I'm the VP Strategic Development for AmTrust Financial. AmTrust is a U.S. property and casualty insurer. We do $8 billion of premium a year in the small business and extended warranties. Essentially, I head up our corporate venture capital and innovation work both in Israel as well as worldwide.
Hi, I'm Eric Arnold, CEO of Planswell. Planswell is a financial planning startup out of Toronto, Canada. Basically, we've made it possible for all Canadians and soon people around the world to build an entire financial plan in about 3 minutes that tells them exactly what they need to do on a monthly basis to maintain their lifestyle into the future, whether it's in retirement, putting their kids through school, or if something unexpected happens that prevents them from working. Basically, people want to be able to maintain their lifestyle. So we do that across investments, insurance, and also lending and mortgages. We give the plan away for free. It takes about 3 minutes, and then we monetize by implementing that plan for people.
Hi everyone, I'm Lior Simon. I'm head of Arbor Ventures Israel. We are a global FinTech fund headquartered in Hong Kong with operations in Shanghai, Tokyo, the US, and Israel. We invest globally in FinTech startups in the very broad sense in several sub-verticals, and we're backed mostly by some of the leading financial institutions globally, banks, insurance companies, asset management companies, credit card issuers, and several others. Great to be here.
Okay, so first question, how do large traditional insurance companies, both in Israel and globally, see the rise in strengths and numbers of technology-driven startups in the insurance world, otherwise known as the InsurTech companies?
Should I start?
Right.
So there are definitely elements of fear and intimidation in some areas, but we are seeing insurance companies very active around looking at innovations. And as a PwC survey conducted and summarized that innovation is the lifeblood of business growth and health of insurance companies, and over 50% of insurance company CEOs claimed that innovation is a competitive necessity for their business. So we're seeing insurance companies very active in looking at innovations and startups and partnering with them, investing directly and indirectly. And we see that actively where our fund, Arbor Ventures, is backed by some of the leading insurance companies globally. And the reason they invested in us is not just for the financial outcome, but for the insights and the reach into innovation and startups in this space. And that is relatively new for most of the insurance companies.
I could talk about our experience. So we decided to invest in this word of innovation roughly 12 months ago. And I, of course, speak to a lot of my contemporaries out in the world about the very similar endeavors they've also decided to embark on. We're trying to figure it out. So the world of InsurTech, as we all know, is very, very new. A lot of you guys, I know from the world, and you all work with these InsurTechs, so you are InsurTechs. Firstly, we really need to find a way to work with these technologies to improve our business. So most of us, when we're looking at this world, we're thinking about how do we improve our insurance company as a company? Very little are we thinking about, let's make a financial investment. It's about how do we improve ourselves as a strategic player? How do we work with you or invest with you to improve our business? It's about our own thought process. It's very similar to what FinTech was 10 years ago when it started the banks. I think the one thing that we are trying to do a little bit different or learn from the banks from 10 years ago is most of us are not trying to push back on these companies. I think 10 years ago in banks, a lot of these FinTechs opened up and the banks were getting nervous about it. They were banging back on them. They were trying to fight back on them, push back on them. Some of this exists today. I mean, I was actually in a panel last week with a guy from Zurich Insurance, and he was saying how we should push back on these guys and we should not partner with the Amazons if they do something. And most of us are not like that, though. Most of us are trying to figure out a way to work with these guys and improve the business. It is not the word, though, of innovation that we all talk about, that we're going to disrupt the whole world of insurance. We are not disrupting the whole of insurance. Very few are trying, and I hope they do really well. We are trying to make little dents of innovation to try to become a 21st century insurance company, let alone, farther on beyond that.
So what are the advantages of big insurance companies versus small companies and InsurTech companies?
From what perspective, an advantage? What do you mean?
What are the advantages that they can use to compete in this area?
Oh, well, insurance companies have remarkable amount of distribution and capital. I mean, if you want to be in the world of insurance, you want to be a standalone. There's a reason Lemonade just raised hundreds of millions of dollars, okay? To play in this world of insurance, you're talking about thousands of years of actuarial experience, people that have been doing this forever, underwriters, capital, distribution market. It's not like one of these worlds I could just say, oh, I'm going to get on the internet and start, chopping out pieces of this world. It's a very, very different world, this insurance space. It's very legacy, and it's very old, and it's very cumbersome, and there's things to fix. But it's extremely hard to work in that world by yourself. So in a way, you have a situation where you have these technology companies with really smart guys, great tech, want to play in this space where there's a lot of money to make, and they don't really have the capability to do it by themselves in most cases. The insurance companies have a lot of knowledge, expertise, know-how in their spaces. When it comes to this tech, I mean, if I use the word API, which in my company, which we all know what it means, but to know what API means and to actually use an API in a very smooth way, that is a whole different ballgame, right? And that's an API. Let's not talk about cloud and AI and all these other wonderful blockchain words. And I mean, we're talking about low-hanging fruit, okay? So there's a great, great partnership here, which is not simple and complicated, but there's a major advantage to work with insurance companies.
Yeah. What I would like to add is our perspective as a consulting firm is when we're supporting major insurance companies, both in Israel but also global insurance companies, what we see them is already reacting to the changing environment. And I think in the last 3 years, we've been seeing major insurance companies establishing a new strategy in front of what we call InsurTechs or the InsurTechs technology. It does take a little bit more time, and as you said, they're not going to be, as far as we see it, we don't see them become technological competitors to you guys, to the InsurTechs guys. We see them more on the acquisition and the partnership or investment side. We still don't see them, again, as a strategic consultant. We don't see them getting into developing their own technology, but they do react. And I know that many assume that those major incumbents will, in some way, might lose their businesses. They don't believe so, and they are really they're not changing their business models fast enough, but they are reacting to it. They're building what they call innovation mechanism, and they do cope with the changing environment as far as we see it.
I think it depends on the kind of company you're talking about when you label everything as InsurTech. I think there are a lot of companies out there that are creating technologies that can enhance an insurance company's ability to do things. Like if I have some widget that makes underwriting faster or can cut down on timelines, obviously that's a B2B company. They want to be friends with the insurance company. The insurance company wants them to help them build their business, right? So if you, like for us, our example, we've pitched over 400 people for investments as we were going along. We raised quite a bit of money. The valuations that traditional investors or VCs were willing to place on it were much, much lower than what insurance companies were willing to place on it, because they saw it as a kind of a risk to their business. So that can be really interesting. So yeah, it's an interesting experience talking to the insurance companies about it. Yeah.
Here's the one issue though with the distribution. At the end of the day, you're not these new distributors or these MGAs or these new ways of distributing insurance, which is great. They're not changing the paradigm. So what's been going on is that, at least I know, AmTrust, I've seen a lot of other insurance companies. They have these new divisions where they say, okay, we understand there's this world of new distribution, easier ways to sell insurance. Everyone has tens of thousands of agents. So we'll do it simpler. Partner with us. We have the capital, we have the carrier, we have the actual license at the end of the day. So they'll have a lot of these distributors out there, a lot of these MGAs. At the end of the day, if everyone has a little small piece of the pie, there'll be just another agent, which is great, but again, we're not innovating a whole market that way. I don't know if that will get that innovation that everyone is talking about by doing just that.
I think, and maybe I'll just add to your points, if you look at Fortune 500, about 5% of it is made of insurance companies, and the top 10 insurance companies globally are averaged at over a century, some of them over 200 years old. So this is over 100 years of data aggregated, which is a huge advantage for insurance companies. And with that, the new players and the new modern digital companies, insurance companies, although being young, are actually collecting hundreds of data points as opposed to the few dozen that insurance companies have. And that is a big advantage to them. So they're able to analyze not only groups, but subgroups and bring in much richer insights. And so they're slowly closing the gap. And I think that's where insurance companies have to move fast as well and utilize their data in deep pockets.
Thank you. So you all work locally and globally. Do you see any difference between the insurance companies in Israel and globally?
Well, in 2017, we've worked with one of Israel's top insurance companies, I think the biggest. As I said, what we see is already they're making moves in terms of planning and how to cope with the changing environment. What Israeli companies have as an advantage, and let me know if you think otherwise, is that they are very close to the startup hub. One of the things that we find very easy to convince, despite the very let's say old management and perspective, is that the change is coming, and what they need to do is to start thinking about how to change themselves, not entirely, but partly or in some ways to cope with startups and everything. And it's easier than what we see our colleagues do in Europe, because all we have to do is point them out to 2-3 interesting startups that are right here in Tel Aviv or Herzliya, and get them and get a better understanding. Even sometimes we'll bring them to part of the meetings to present them with new ideas. So I think it's all about relationships, and what I see is easier for Israelis.
I'm going to throw the question back to you in a second, because you're from an Israeli insurance company. But the insurance market in Israel is very different than the rest of the world. I mean, firstly, it's a market that has literally 4 or 5 insurance companies, for real. Sorry if I offend anybody here, but that's the truth. 4 or 5 insurance companies run the whole country, give or take, when it comes to insurance. And the insurance market here, it's not at all the same market as you have in Europe nor the US. It's very different. So it's hard to compare. What you said is right, though, because here, you know, it's your backyard. Here, everyone comes from this small network of Israelis that we all grew up and are good friends with each other. And it's very easy to get to these startups, and there's also more of an openness to bring them in for a POC. I would ask, though, how many of these POCs are actually going to production to see what the real success is. POCs are quote-unquote easy, okay? You don't pay much for them, and it's not that painful to get a POC in, depending on the company. And for me, I'd be more interested in knowing how many of these POCs are successful within Israel with global type of InsurTechs, so not InsurTechs that are focused on the Israeli market, because those are not interesting for the world, versus what's going on in Europe and or the US. But I think, Orly, you should answer the question, though. I mean, you're from Menorah. You would tell us best.
You're turning the question to me. I think the same. I think that the reason that we can be open to innovation and make innovation more easier is because we are close to the startup nation. So it's easier for us to do the scouting phase and to find the relevant startups. On the other end, we know that in Israel we are embracing and engaging the new technologies later than in the world. So there are two sides for that issue, as I see it. Which future trend can be considered as the most worrying or challenging by the major insurance companies?
So you were mentioning before about you can just have millions and millions of MGAs and they can have millions and millions of advisors, and that doesn't really move the needle. I think you're seeing in the wealth space, you're seeing robo-advisors kind of in their infancy, starting to gain market share and starting to get a lot of assets under management. We haven't really seen a lot of change in distribution for insurance. People inherently want to invest. They want to get richer in the future. They know they have to do that. It's a part of your life. People don't really want to buy insurance. Like I'm not talking about home and auto insurance, like, you know, you have to get that. But when it comes to life insurance, like, I'm not going to die today, so I can just buy insurance in the future. It's just the general, yeah, they hate it, right? So it generally needs to be sold by a human. That's changing. We've made great successes in figuring out how to get people to be interested in insurance through really great financial planning that has previously not been available to regular people. And we're seeing like tens of thousands of people a month create financial plans with us, understand how insurance fits into that plan with their investing, with their borrowing. And that's getting the attention of insurance companies. So I think in the future, as with all industries, you see like with massive sales forces or workforces or taxi drivers or whatever it is, the future probably involves more intelligent marketing that can actually break through to consumers on behalf of the actual manufacturer or insurance company and potentially move towards cutting out the advisor. And that's a pretty terrifying proposition because that's such a big part of the insurance business is the distribution channels. But I do strongly believe that they can be replaced in the next even 10 years.
So along to what you were saying, I think the biggest trend that is probably the biggest risk also for insurance companies and where they really have to get their minds around is the change in customers' behavior and expectations. I think that really sums up a lot of what you said and a lot of the risks they have out there, right? So insurance companies have cybersecurity risks and IT and tech gaps and around underwriting and claims management, several risks. But I think this is the risk that really sums a lot of it up. It is giving the customers of the insurance companies, at the end of the day, they're consumers. We're all consumers. And we can't disconnect that. We can't be customers for insurance companies and just say, okay, to the several endless documents we have to fill out and spending hours on the line or face-to-face with an agent, or just keeping quiet when half of the rightful claim that we made comes back the following month, because consumers are no longer forgiving. And in an era where we order a taxi in 2 seconds and a minute later it's waiting downstairs, and we do our digital transfers and whatnot on our digital banking app, the banks have closed the gaps in many levels. Insurance has to close the gap on that as well, and that is being able to offer a digital experience end-to-end from distribution to onboarding, the claims management process, and I think that is probably the biggest trend that's affecting the industry.
Okay, I'd just like to narrow it a bit, because I totally agree with you. But what we see sitting with upper management of insurance companies are actually the fear of the trend that is called millennials or Generation Z or Z, and their growing part from the economic consumption. By the way, not just for insurance, but generally speaking. And I think these two generations are, they represent a radical break, right? In a sense that they're very different in their consumption patterns. And they, first of all, rely on the latest technology. They're not afraid to adopt any new technology. They prefer mobile services over companies that are, hire humans to mediate, or agent or brokers. And I think that when sitting with these upper management consists of people that are usually above 50 years old, this is what their main concern. The current markets, you mentioned taxis. People are still, ordering taxis by phone. So there's still this classic market or old market that they rely on. But millennials and Generation Z are I think they're most concerned, and what will happen when they come bigger.
I just want to add to your point, sorry, last thing, in addition to what I just said earlier, is it's interesting that the change in customer behavior was the only risk in the top 10 most dangerous risks for insurance companies that was added to the list in 2018 as opposed to 2017 in a Willis Towers Watson survey of over 200 insurance CEOs. And I think that really sums it up. And they see that their insured customers' average age increases almost a full year every year. And that comes back to what you're saying. Where is the younger generation? And they're obviously missing out on a lot of them, right? Where the products that have been offered for over 50 years, the younger generation don't see value in them. Where if you can't, they don't see interest in sales and claims processes that they can't complete in a few clicks on their mobile phones. So that is really what's calling for change.
I have one comment though. I should disagree with all of you, to be honest. Yes, of course we all have customer experience and we want to get there, and whoever knows me knows I'm the most impatient person in the world, so trust me, I'm all about customer experience. But we have to take a step back. An insurance company can't do anything unless it touches its core to fix these other issues. And at the end of the day, an insurance company is a data-driven risk management entity. That's what it is. Nothing else. It's not a retail e-commerce platform. It's not one of these taxi companies. It's not any of that. So if you want insurance companies to be able to provide customer experience the way you want it to, that's great. It's an end game. But trends, the real trends you have to hit to get real core value of an insurance company is helping them with their data analysis. I'm gonna use a word we haven't used in a long time. Big data, not AI, not machine learning, not deep learning neural networks, okay? Big data analysis. We haven't used the word in years, right? Guess what? They have no big data, okay? There's no big data. So data analysis, understanding better risk management, help them take what they're great at with tech that's out there today, make it better. Where does all this stuff come from? Claims, guys, in claims and in the underwriting, it actually feeds its pricing, yes, no, and pricing from claims. And the claims information is what feeds everything. If you're able to help them in those core areas, anyone that's a tech company out there, if you have a tech that can help in core areas like that, it will then funnel out. It will funnel out with everything else. It will help customer experience, because then the company can feel better about giving the customer experience. But that's down the road. Core.
Great. I see that we are running out of time, and we'll hear the buzz in a few minutes. So I want to thank you very much for participating in this panel. And thank you all for listening. Thank you.